Hello everyone, Jeff Green here again with a market timing update for fiscal week 22, which starts on Tuesday this week, June 1st, 2022. So last week's trading was kind of bizarre. We were at extreme lows, as you can see on the daily chart here. And this week involved a profit warning from Snap, an interpretation from Fed minutes that the Fed intends to raise interest rates more quickly, and a sort of a counterintuitive move up on a revised downward GDP number. So that displays the normal unexpected moves from the stock market. But if you follow market trends, you'll stay on the right side. So let's take a look at the weekly. Well, let's do this. Let's take a look at the daily chart for starters, because that's where all the action was this week. And you can see, let me get a drawing pen, you can see that I moved this daily box. Actually, I added the daily box. It started on Wednesday. And let's take a look at this action here. So the daily looks a little bit more bullish than it used to. So I actually did take some positions on this day right here. So always, if you can get leading stocks and leading sectors, that's the thing to be involved as the market continues to move up. But here's some concerns. I have some concerns on this move being sustainable. Very dismal purchasing volume. It's almost like a cessation of selling versus an increase in institutional buying. The MACD is still below zero, but we got a move up and a MACD cross on Tuesday, so that's bullish. And we've got the unbalanced volume moving up, advanced decline on the New York Exchange moving up, and the advanced decline line on the NASDAQ also moving up. And also, we've got the DMI plus looking like it's going to move above the DMI minus. So once you get to this sort of cross here, that's fairly bullish. And you can go back and look at these sorts of crosses. Here's a bearish cross. Here's where they came together a little bit. If you look at this bearish cross, follow that up here, that was kind of a bearish time in the market. So this is a pretty good indicator to follow. So that's what happened on the daily chart. The problem here is that, like I said, we've got these sort of low volume days. We did move above this trend line here, but we've got a lot of resistance here to get by. What we really need to do is get the Chiku line above the current prices up in this area here, and the Chiku line is a reflection back of the current day prices. So if you look right here, that's how the Chiku line works. And you'll find this to be a very dependable indicator on bullish trends in the market. The other thing that we've got right above, besides this resistance level here, we've got the 50-day moving average coming down from overhead, which is a pretty significant resistance. And we also have the 200-day moving average coming down, which sort of coincides with this longer-term trend line here. So we'll come back to this chart in a minute. We'll talk about posture for this week. Let me get rid of this here. We'll get the weekly chart up and sort of see how this week's bounce folds into the weekly chart. So again, here's the weekly chart over here. Let me get my pen back. Dismal volume, right? That's not what you want to see on the start of a move up. What you want to see is a volume like this guy right here. If you had that this week, I'd be a lot happier and more convinced that this was a blast off from the bottom. So we haven't yet put in a higher low. So we've got this low that we're bouncing off here, which is good, but not indicative of a real strong move. We've got the MACD that hasn't turned up yet. We've got the unbalanced volume has not turned up yet. On the weekly chart, the advanced declines are looking a little bit more positive, but the ADX is nowhere near crossing over here. We're at least 3 or 4 weeks away from that crossing, even if the prices continue to go up. So on the weekly chart, you can see this overhead resistance here again. So I suspect that this move might be a bounce in a longer-term bear market. So let's be cautious here. Here's what I'd like to see. I'd like to see these prices move up and close in this area here, or better than that here. And of course, if prices continue to move up, I suggest you buy leading stock in leading sectors. I think the market might have a little challenge here. We might see a pushback down. And if we do that, it remains to be seen how far down it's going to go. There's this sort of shorter term downtrend line that I that I put in here a couple of weeks ago. I think that will provide some support in this area. If we come back down to here, I think that's a real problem. But I'm looking at this area right here for some resistance. And of course, if we close above it, I think more purchases are in order. So I suggest you take a look at leading stocks and leading sectors. I suggest you tiptoe into this market gently. I also suggest that you keep stocks stop losses tight on any positions that you take, and just be cautious. Watch this daily action for maybe a pushback in this area here, and take profits when you can get them. That's what swing trading is all about, and in the long term you'll do a little bit better than waiting for the market to hand you something that's a little bit more unplanned. So that's my analysis for this week. I hope this helps. Please like and subscribe, and we'll talk to you once again next weekend.